Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of January 28th, 2013. Hello, I'm John Thomas from Primary Residential Mortgage here to give you your update. Well, last week was certainly not a good week for mortgage rates. Mortgage rates did bounce higher last week, and they bounced a lot higher. It was not a good week for mortgage bonds. If you look at the chart on the screen, we were hoping for recovery last week to bounce off support, which you can see on the screen. We did bounce off support, but then Thursday we hit a ceiling of resistance, and some news came out for initial jobless claims that sent mortgage bonds reeling. They sold off. Look at the huge red candle down. And then on Friday, they gapped below the support level and then sold off again. So it was bad news for mortgage bonds. That sent rates higher. Now, we did stop right at the 200-day moving average, which you can see right there on the screen. So if we're hoping this week we can bounce off that support at the 200-day moving average, get some recovery, and have rates recover somewhat and move higher. But we do have to be mindful. If on Monday we open up below that 200-day moving average, we're going to switch to a locking stance. And we'll be in a locking stance for a while because that would be certainly bad news for mortgage bonds. Now, what caused this move last week? Well, on Thursday, where we had the big red candle, that was when initial jobless claims were weak for the week, and they came out at 330,000, which was very, very good, and it was 5,000 less than expected. So that's the fourth week in a row they've come out better than expected, and it's showing jobless claims are trending lower. That is a good sign of recovery for employment. So that is bad news for mortgage bonds. That sent money moving from the bonds into the stock market. And then on Friday, the big gap lower was we had some reports out of Germany, Japan, and China, which were all very favorable. So it sent money into the stock market. The stock market was soaring on Friday at the expense of bonds. So the bonds were being hurt. They were selling off. So when the bond sells off, mortgage rates move higher. That's what we saw last week. Now, going forward this weekend, recommended flow to see if we recover off the 200-day moving average. In the housing, economists released some news on housing. They're expecting housing again in 2013 to be better than it was in 2012. Expecting a great recovery. Looking at it between 6 and 7% appreciation on your investment if you buy a home in the beginning of 2013 to the end. Now they're saying that should be fine as long as the federal government doesn't screw it up. Federal government is facing two issues right now they have to deal with. The debt ceiling. We hit the debt ceiling of $16.4 trillion on December 31st. So they have to raise that. Now they did kick the can, did a temporary raise, kicked it down to the end of March, give them a little bit more time because it was going to be the end of February for the government shutdown. And then the second thing they have to deal with in conjunction with the debt ceiling is the budget. The reason why the debt ceiling keeps going up is because we're spending more than we make, so we need to get a budget that deals with that. So those two issues, depending on how our Congress deals with them, if they do it the right way, we can see economy keep recovering, housing keep recovering, have a great year. The second thing we saw last week was existing home sales for December 2012 were released. It came in at 4.9 million units annually. Now, the media made it sound like that was a bad news because they missed the expected 5.1 million units, which it wasn't bad news. It was actually good news. If you look at the picture on the screen, 4.9 million units this year compared to 4.38 million last year. Housing's recovering, had a great year in 2012. We're looking for another great year in 2013. So it was a good report. It did show housing had a good year last year. And if you take out November 2009 with the tax credit, it was the best year in 5 years. So sometimes the media gets it wrong. The Federal Reserve released the final rule on appraisals for high-priced mortgage loans. Basically goes into effect January 18, 2014. Going to require all lenders to use a certified or licensed appraiser on high-priced mortgage loans, and it's going to have some restrictions on property flipping for those loans. So if you want to get the scoop on that, there's a link in the blog to an article on that. And then the second rule released last week was the Consumer Financial Protection Bureau released rules on mortgage servicers dealing with foreclosures. They basically put some rules into place to protect homeowners that are facing foreclosures and making sure lenders are presenting them with all their options and doing it in a time-sensitive way. So again, some great information there. In the blog is a link to an article on that. Definitely check that out. Give that a read. In the local news, we got the next free first-time homebuyer seminar Saturday, February 16th. That's in Newark, Delaware at the Christiana Hilton Hotel. 2 sessions to choose from, 10 a.m. to noon or 1 p.m. to 3 p.m. The next one in Dover is Tuesday, February 19th. That's at the Dover Sheraton Hotel, and that's from 6:30 p.m. to 8:30 p.m. You can register for either one of those events by giving us a call in the office, 302-703-0727, or you can register online, www.delawarehomebuyerSeminar.com. Now, if you are looking to purchase a home this year and you want to take advantage of this housing market, this appreciation, and rates are still low, even though they moved higher, they're still in the high threes, so it's a great time to buy a home. We will give you a free mortgage analysis. give us a call, 302-703-0727. We'll get you pre-approved or get you in our Get Mortgage Ready program. If you got questions on first-time homebuyer programs or you are a first-time homebuyer, get the book I wrote, Your Guide to Buying Your First Home in Delaware. There's a link in the blog to buy that as well. Or come in our office. We'll give you a copy. All right. Look forward to seeing you guys next week.